Okay, I think we're live. What's up? Hope everyone's doing well. Had a nice weekend. I imagine most maybe didn't. But we're here anyway, right? Make it all back in one trade. And I'm assuming you can see my screen, hear my voice. Thank you, Richard. Reliable, as always. Thank you for the feedback. Cool. Nice, everything's working. Great. Now, there's no shortage of things to talk about. So we can get rolling. First things first, thank you to Blockfolio, the sponsor of Technical Roundup. Blockfolio is a mobile trading app. You can do asset swaps and all sorts, but most importantly, you can't do leverage. So if you held your held your Bitcoin and your positions on Blockfolio, you wouldn't have been liquidated. Blah blah blah. You know how it is. I'm just joking at the expense of today's subject matter, which is liquidations. But yes, thank you to Blockfolio, mobile trading app. I use it for portfolio tracking, some spot trading, etc., etc. So that's all really cool. Thank you to them, and let's continue. Lakash says your voice is in reverb, mate. I'm assuming the audio is okay. Maybe is that FUD? I imagine it's FUD. My audio seems to be okay, but let me know. I lost everything because of Ren. Okay. Okay, so let's talk, right? Let's talk about Bitcoin. As you know, we have a little discuss panel here, and I want to start off with some contextual stuff. Then we'll talk about the crash, and then we'll talk about my positioning, which is less relevant, but also just what I'm looking for moving forward, which is more relevant. So we'll start with the really short stuff, just interesting behaviors in the market, which I'm new to. And you can see here it's chart from Skew showing that there's the correlations between the top 10 crypto assets is decreasing this year, right? So Ari Paul of Block Tower, he's saying the inverse of correlation is dispersion. So rising dispersion is caused by a maturation of the asset class and different market participants, etc., etc. He also makes a very interesting point that in major crashes, expect correlations to rise. Agreed, generally speaking. I think this really started becoming interesting and particularly prevalent in DeFi. So even if the market was moving flat or Bitcoin was down a bit, etc., for the most part, DeFi flows, so to speak, were very secular and weren't just entirely contingent on Bitcoin price action, right? Which is pretty cool. I saw the way Loomdart described it, which is great. He said, we're approaching a point in time where altcoins aren't just higher beta or the cracked out version of Bitcoin. Altcoins have their own flows, price action, supply, demand, etc., etc., their own price discovery on a day-to-day basis. And that's something you have to welcome as anyone who trades crypto, right? That's the thing. Using altcoin leverage is in itself kind of tautological because most altcoins kind of act as a levered Bitcoin as it is, right? So they dump, like historically, normally under normal circumstances, whatever, they dump harder than Bitcoin when the market dumps, and they pump harder than Bitcoin when the market pumps. So that's kind of like applying leverage, right? And so then you take the full crackhead combo where you take that relationship and then apply leverage to the altcoins themselves. And in some cases, maybe you've even got altcoins as your collateral for those leveraged positions. It's, it gets pretty ugly pretty quickly. Like when some of these altcoins are moving 20, 30, 40% per day, it's like you don't really need leverage to take advantage of that, right? Like if we're stuck in a hellish range in Bitcoin of like 1 or 2% and you're just trying to pick up some crumbs in front of the steamroller, then I understand using leverage, and I'm fine using it in those contexts as well when I'm trading really small rotations on Bitcoin, like lower time frame stuff. I think that's all totally reasonable and makes sense. But the sort of altcoin leverage we saw on the run up, that's where things get a little bit dicey. And in most cases, people aren't accurately calculating their liquidation and the amount of maintenance margin they need if their positions all go against them at the same time, right? Especially if you have coin margined futures, then you're in real trouble because convexity triple fucks you on the long side, right? So that's all normal. I really hope this sticks around. And already in major crashes, expect correlation to rise. I agree in principle, but it's kind of fascinating to see how that's just not been the case so far with crypto. Like Bitcoin nuked with March futures going into backwardation for like half an hour. ETH suffered as well, but Dogecoin went up, Solana got instantly rebid, etc., etc. So it's not the same kind of okay, everything's down, full bloodbath, etc. There are pockets of resilience in the market, which is pretty cool. At the same time, we write a lot in Technical Roundup about relative strength. So it's stuff like, okay, if the whole market's taking a shit, what's not taking a shit, or what's taking a shit the least, or what's green, etc., etc. And that's been just a good play generally. Oddly enough, the answer's been Dogecoin for most of it. But that's something to pay attention to, both on a coin basis and also just like on an altcoin sector basis generally. So that's pretty interesting. I want to see how this develops, how this whole Dogecoin thing plays out, etc. But if there's more dispersion in crypto, great. So by convexity, I mean, if you're trading linear futures, there's basically kind of a linear relationship between the move you're trading and your P&L as well as collateral value, right? Whereas if you're trading coin margined futures and you're long, if the price starts to move against you, because you're collateralized in the underlying, as the market drops, you become less collateralized for that position. Because again, you're collateralized in the underlying, and the underlying is dropping in value, right? So that's the bit of convexity that fucks you. And suddenly, by virtue of being less collateralized for the same position, while the market's moving against you, your liquidation price comes, your margin requirements go up, and your liquidation price comes closer to the current price. So there's basically, it alludes to the non-linear relationship when trading inverse futures, when it comes to your collateral and your P&L. That's the basic version. I'm sure I've got it somewhere here still. Futures article. This is kind of not a dead project per se, but this certainly been on the back burner. Last edit was January 1st. This will come out eventually. We'll do it at some point. Yeah, KS. Convexity applies to inverse futures, correct. Where do we have this? Convexity. There we go. No, did I not write about that? Hold on. I refuse to believe that. Let me zoom in a little bit. This will come out at some point this year, maybe not. I wrote about convexity somewhere. I know I did. Right. So this section kind of has it. If you want to screenshot it, I mean, you can go ahead and take a look here. I think it's correct. I haven't proofread this, and the last came out in January. But yeah, there's basically non-linearity when it comes to trading inverse futures, and they're more skewed towards shorts. So the short side benefits from the convexity, the long side doesn't, technically. Yeah, so yeah, this is a nice little document. Again, I'll try to sort of maybe finish it this year, but you can understand the market conditions haven't been accommodating towards just not being in the market. But this is sort of what we want to get through at some point. Anyway, that's that. There's more to discuss. This is a slightly verging on the pet peeve side of things, but there's a fantastic thread by Sam Trabucco of Alameda talking about the drop, right? And this is just a really good thread. I strongly recommend it. Let me post it for you to take a read. And yeah, I'm not going to read through every single tweet, but there's a really good takeaway message here that, first of all, liquidity is thinner on weekends, and as a result, the market's more prone to liquidation cascades if things start to move against the direction where most of the market is, positioned, or where most of the leverage is. So when you have an expectation for an event to lead to a certain move in price, and then the market positions in accordance with that expectation, and then the expectation is either underwhelming or doesn't play out at all, then that leverage gets unwound sooner rather than later, right? And especially when that unwinding takes place in less liquid conditions, it's like overnight sessions and during the weekend, etc. In this case, it was both. That's when you're prone to, it's easier to push price around when the book is thinner, fewer resting orders to execute those liquidations into, and so the price move that follows as a result will be exaggerated and or exacerbated. Does that make sense so far? You can see that here. Premia have been high, ton of aggressive buying going on, especially going into the coin listing. Open interest is going up, altcoins as well, etc., etc. And when that fails to materialize, and you're still paying that funding on your hugely levered notional position, and you get poked and you're offside, those unwinds get unattractive. Right? But yeah, it's a really good thread. It just covers all of those market mechanics here. You can see that I talked on Thanksgiving about how low liquidity exacerbated the impact of the liquidations. The same is true on the weekends, right? Let me see if I missed anything that's interesting here. Yeah, that's more or less it. Now, here's where the pet peeve of mine comes in, right? So, and someone kind of alluded to it. Fantasy Cricket Freak alluded to it when he says, did you see Willy Woo's thread about similar hash rate drop in November 2017? Okay, here we go, right? So, after big moves, you will normally get a lot of hindsight posting on Twitter, which is already kind of a pain in the ass because, okay, the moves happened. Thank you for your, explanation after the fact. But anyway, there are some really legitimate use cases for explaining what happened, right? After it happened. So a good example is if understanding what happened in the past, like for example, the conclusions we came to about thinner weekend liquidity, helps you to position in the future. So maybe you deleverage into the weekend or trim some size, take some profit, whatever. So in those kinds of examples where you look to the past in order to inform your future participation in the market, that's really cool, right? Now, another example, kind of an extension of that, is you look into what happened. So who got liquidated, which contracts, what bounced in terms of altcoins while Bitcoin dropped, etc., etc. If you use that to explain or to give you context for what to do next, right? So if you use it for lessons, right? Lessons, that's a good use case of hindsight explaining the past, etc., right? If you use it to inform you of what to do next, what next? That's another use case of, or sort of valid way or means of explaining what happened, right? Now, these two make up for a minority, right? The overwhelming majority of the shit you see on Twitter is the shit kind, which says, look, I'm so clever / called it, right? And they'll find some absolutely obscure, irrelevant tweet to kind of back it amongst 50 other tweets, all flip-floppy, showing you why they're so clever. And sometimes it's even worse. They'll say, oh, well, I actually called this in my private group, and if you'd paid for it, you would have been privy to this information. This is very useful. Lessons learnt, so you can not get stuck making the same mistakes. This is very useful because that context provides information as to what to do next. This is about as useful as Anne Frank's drum kit. And it's just pure ego bullshit and, I don't know, influencers feeling the need to provide market commentary despite having nothing interesting or original to say. Right? And one of the worst parts is, and I know this from personal experience, a lot of the hindsight charts that come out, they'll genuinely make you feel bad or make you feel stupid if you weren't positioned in that way. Like they have some obvious like TA thing, some obvious like seemingly obvious indicator that makes the whole drop look incredibly predictable. And if you're someone who got wrecked on that drop, you're also probably to some extent emotionally biased, vulnerable, whatever. And you looking at that, which makes you feel even dumber, it's just an ugly combination. So I think it's worth applying a bit of a critical filter when you're looking into the past. Like, okay, does this teach me something about market microstructure that I can take forward? Cool. Does this give me context for what I can do next as a result of understanding what happened? Also very cool. And then the last one, which is this person just trying to suck themselves off? Slightly less cool, slightly less relevant for our purposes, right? That's my view, at least. So the Trabuco thread, very good. A lot of the other threads, charts, whatever, not so good, let's just say. Now, let's talk about market structure, both from a price point of view, but also just as a result of this drop. Now, if we jump onto... Hold on. Where'd it go? If we jump onto Coinalyze, here we go. Here we go. And we go to futures data, global charts for all coins. This is the data I'm using on that drop. You can see 6.83 billion total licks. And then if we go to Bitcoin specifically, accounted for roughly half of those liquidations, right? That's a lot. That's a lot. That's like a record number by far, I think. And this is actually one of those flush events that we've talked about in the past, right? The market gets completely rinsed. So OI gets wiped. You get massive liquidations, funding reset, futures trade in backwardation for some period of time. Like the whole kind of, when you see on Twitter, like, oh, shake out the weak hands. And it's like a dip on the hourly, which is barely visible, with no difference in open interest, funding stays jacked, no liquidations, etc. That kind of shit is the stuff you want to avoid because it's not meaningful. Like the magnitude of the move just simply doesn't warrant that type of analysis. If you're ever going to make a case for the flush, the reset, the weak hands shake out, blah, 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 it has to be on days like these, where you get just these big liquidation dildos, essentially, which are clear outliers from normal day-to-day trading. And there's another Coinalyze chart here, which tells the story quite nicely. And this is generally what you want to see if you're making a case for leverage being purged from the system, right? So up here you've got price. Here you've got the aggregated funding rate. This is just for Bitcoin generally. It's Coinalyze's own aggregate index, which is cool. Aggregated licks and open interest. Right now, the funding rate is the mechanism which keeps perpetual swaps in line with the spot price. Again, these aren't futures which expire. They're supposed to go on. Well, they don't expire. They stick around in perpetuity, right? So if you don't have an expiration and you don't have a basis, etc., etc., you need to find a way to keep. It's basically perpetual swaps are supposed to mimic spot one way or another, right? It's supposed to be just like a liquid spot trading instrument, as close as you can anyway. So then the question is, if there's no futures curve, etc., etc., how do you keep this never expiring future somewhat in line with the spot price or the index price or the instrument, whatever, that it's trying to mimic? And the answer is funding rate, which is, I'm sure you've all been there, how much you pay to be long or short, right? And the funding rate is affected by net positioning in the market, and it's supposed to sort of incentivize price of the swap to trade closer to the index, okay? So when you see negative, for example, funding will generally, or for the most part, you can just see it here, be positive, right? You're paying to be long, and then when funding gets negative, then you get paid to be long, right? So just like futures typically trade at a premium to spot, funding on perps will typically, under normal circumstances, be positive as well, right? Now, when it comes to the anatomy of the flush, so to speak, these are kind of the main three things where you'd expect significant moves. First of all, I mean, it's not like a chronology, 1, 2, 3. It's just kind of putting the picture together. You get a big drop in price, right? What happens when you get a big drop in price? Those on the wrong side of it get liquidated. So you can see kind of, it's just a huge shift, clear outlier event when it comes to liquidations. As a result of those positions being forcibly closed, open interest also drops. And then in doing so, when those longs get flushed from the market, and when you have perps trading at a discount to spot, right, all that forced selling drags the swap below the spot price. The funding is quote unquote reset or even goes negative to encourage more longs into the market so that the swap trades up closer to the spot price, right? The liquidations take it lower and exaggerate the move to the downside, right? Via liquidations cascades, etc., etc. And so then, in order to bridge the gap between the swap, or the perp, whatever, and spot, after it got nuked big time, you need to get more longs, or incentivize longs into the market, right? In order to bridge this gap. And how do you do that? I mean, that's kind of negative or flat funding, right? It's not expensive to be long, or you rather even get paid to get long, and that's the ARB, and you ARB that to make up the difference. Just like when funding is positive, it's the opposite side of that same arbitrage trade, right? I think Sam Trabucco in his FTX thread outlined what they were doing during the course of the drop, and that provides a very helpful and reasonable kind of beginner's guide, whatever. So yeah, that's kind of the anatomy of what we're dealing with in terms of what happened to the market. And more importantly, for me, for those of you who've watched previous technical roundups, I care less about, like, the least attractive place to trade for me is basically right now, where the main sort of liquidation event has already happened, but there's not been enough structure built to tell you what the market's going to do about it. Because you know, as we mentioned earlier, when these big liquidation cascades happen, crypto breaks, right? Like, exchanges go offline, prices get completely whacked, and it takes a bit of that's when your Alamedas, when your CMSs come in and basically fix the market by arbitraging those crazy discounts that happen in futures, right? So you're either already positioned into the liquidation, in which case you're trading the impulse, or at least if you're taking directional bets, you trade later after the fact, once kind of market structure has settled. And while it's being fixed, that's when your arbitrageurs, etc., do their bit to bring futures back in line with spot to some extent, right? Withdrawals halted, yeah, all of that type of stuff. So just to provide some context, I guess the first thing is my own positioning. As I tweeted, I'm still in USD. I was quite lucky to just not be exposed to this whole thing, which is pretty nice. I think there's a whole Twitter thread. If I recall correctly, my idea was something like this. Where was it? I think there's some sort of 4-hour level that I liked. And then it closed above. I bought the top, but then exited before it nuked me out. My brain just... Oh, it's up here. Okay. Yeah, now I remember. My bad. Everyone said I got licked. Yeah. So this setup here, this is like the final run into the coin listing, roughly. When that nuked, right? When this happened, that's when I first moved to USD. Because my basic idea was two things. One, if the market's bullish, it shouldn't be coming back to retest these previous all-time high levels. And two, if this kind of high funding, etc., is to be justified, I don't need the market nuking, right? It's to some extent the technicals should just keep going or reflect how bullishly positioned participants in the futures market are, right? Now in this case, so this would be a good bullish setup, right? And as we've discussed a million times on stream, when good bullish setups fail, that's typically bearish. So I was happy to hedge, not even hedge, just move into USD when this setup failed here. Now my invalidation was, this box structure is resistance. So if we get a 4-hour close above it, I'll get back into the market. So this 4-hour close kind of just triggered that for me. And I got back into the market in Ethereum, actually. So I went like really heavy ETH in terms of reallocating my USD into spot when this 4-hour close happened. So let's take a look at ETH. So that was a beautiful top buy entry. And then I once again got out of the market because first of all, BTC was nuking. So I was like, shit, that looks like I just bought like the wick of resistance. And then I simply had this, because again, this similar example, the market's setting all-time highs. I expect support to hold. And then when the market closed below or just closed like this at the 4-hour level, it was either this candle or this candle. I think it's this. We can just go check on Twitter. I'm not entirely sure. But basically, when this level failed to do its job, I said, fuck this, I'm out. I'm going to move back into USD because being wrong is okay, staying wrong isn't. And then the last move that I was very close to doing was rebuying this close here. But for reasons I can't explain, mostly due to laziness, and it just kind of felt wrong, I didn't rebuy this close. So essentially I've been stuck, well, in this case, stuck is good, in USD from here-ish. So it's been fun. Well, not really fun, because, you worry about crypto market structure when you see stuff like this. But for the most part, bought the top, got out, almost rebought the top, and then missed the nuke, and I'm still in USD at the moment. So, we'll see. Now the important part, right? So we've talked about market structure in terms of, like, what the fuck happened. And then we must also pay attention to what needs to happen for me to be full kind of bullish goggles back on board. Now, the thing is, as I've said before, the mere fact of massive liquidations, like, that's typically bullish when the trend is bullish, right? It's kind of the leverage wipe, weak hands get shaken out, reset, etc., etc. And that's typically, or at least you can start with the base assumption that it's a continuation signal in the direction of the trend. Right? And that's pretty reasonable. Now, especially, I mean, I might be slightly biased here because I'm still in USD from a pretty good spot. But I generally don't think, like, especially today, is a particularly good time to trade. At least not Bitcoin. Because you have this big nuke which breaks the market in terms of the exchanges, pricing, etc. And then you've got like a low volatility day as the market just churns through those same areas. So it's actually a really, really shitty spot to come up with high conviction theses. Like, yeah, if you were buying the licks themselves and you were getting involved near the lows, then you don't mind trading this today, maybe to de-risk some of those longs into like resistance, what have you, right? But if you're just looking at this from the daily open, for example, and trying to trade or build high conviction positions there, I just don't think the first day after a big impulse is the time to do it, right? So for me, this is one of those cases where I either want to buy higher or I want to buy lower. I don't want to buy in the middle of nowhere. And for me, this is kind of structurally neither here nor there, right? So let's start our very serious technical analysis. So the monthly candle is currently red, and that means we're all fucked and the thing is going to zero. That's it. Thanks for watching. We'll see you. No, I mean, I'm not serious. But one level that I would add with 11 days left in April is the monthly open, right? The monthly open, ideally you want to see that reclaimed or some sort of move above it to turn this candle green so we can continue this trend. Below the monthly open, obviously things look slightly worse. Now again, monthly time frame, not like a whole lot going on, so whatever, not going to put too much weight into it. Weekly time frame, okay? So it's no secret, just looking at the chart, that the breakouts have been getting weaker. right? Like, this here you had up only, then the break from this consolidation was really strong, and then the break from this consolidation is rough, right? In fact, you had an attempted break above it, and then we nuked and closed below the top half of it just a couple of days ago. So this is like some sort of divergence or momentum slowing down, whatever you want to call it. It's certainly not as strong as before, right? So what we can do is look at weekly levels. So conservatively, we have the same highest close as before here, and we can even take another version of the highest close here, right? So on a weekly basis, and this is something you generally don't want to see, is a failed breakout above weekly resistance, right? It doesn't matter whether you want to use the past swing high, the more recent level, etc. You had a close above it and then a close below it in a sort of engulfing type of fashion. That's generally not a strong pattern, right? This is what a strong breakout looks like. The market just completely smashes it and never looks back. This sort of marginal close above and then get nuked, it's clearly quite different price behavior, right? And not in a positive note. The good thing is, as you know, hopefully, from other videos, the idea of a double fake out is pretty rare when it comes to price action, right? So if you've got like a move above, breaks resistance, it comes back, and it fails, right? The level is once again resistance, but if for any reason the market closes back above it again, it's far more likely to just do that rather than, oh, I closed above and went below. Look, I closed above. Aha, I went below again. Like, it generally doesn't fucking happen, right? It doesn't double fake out. Once you get the big fake out and the move back below the level, any move back above the original level is far less likely to be this again, and far more likely to just be acceptance above resistance before trading way higher. So if you wanted to be conservative on the weekly time frame, you could just simply argue there's confluent range high resistance, whatever you want to call it, up to whatever 50, 58, 59k. Any weekly close above, you long it to 60, 70, 80, 90, 100, etc. Anything below that which isn't at support looks significantly worse than previously, right? I think that's a pretty balanced and conservative take for the time being, at least on the weekly time frame, because you basically have a breakout which didn't work. Breakouts which don't work suck. It's not horribly complicated, right? Now, there are some other weekly areas to contend with. Like this lowest close here makes sense as well at 55, 50, well, closer towards 56k, right? But again, this whole area ends up being pretty congested. That's not a word. Congested, right? At this previous range high, and it all just looks a bit sticky. There isn't much space to deal with. I think the more compelling or prevailing narrative isn't this weekly support, although it is, right? It's still weekly support, but I think the driving force for the time being is the failed breakout above the high, or at least the massive, ugly, the ugly rejection from new all-time high. That to me is slightly more weighty in terms of impact than this weekly level here. Now, where is weekly support elsewhere? Well, we've got the lowest close at 45k, and then, if you know, going one level at a time, the previous range between 38 and 32. So then, and yeah, again, the daily time frame shows that breakout attempt quite nicely. You've got this high, break into it, close below it, finds resistance, and then market structure nukes, and it's currently at essentially the midpoint of that previous range. Even just removing your bias completely, we know that when you have a range high and you have a range low, I don't even know where you would put the range low here necessarily, right? I mean, maybe it's this previous high, but that seems a bit sus, right? Probably more closer towards the lows is appropriate. But we know that if you have an attempt to break from balance to one side and it fails, you generally move towards the other side, which is support. So, I mean, if we just take the eyeball level of this lowest close here, if anything, it reaffirms the point that this is a shit place to trade, because we are right in the middle of the range high and the range low. It's probably the area to add which has least conviction in terms of positioning. If you're going to be bullish, you make big, although I wouldn't in this context, you generally make your big bets at support or when levels of resistance get reclaimed, right? If we're talking about range trading. You don't take your high conviction bets right in the middle of the range where it's essentially equidistant from either resistance or support. If anything, in this case, because we've had the failed breakout above resistance and no similar type of attempt to break from balance on the downside, if anything, it's pokey towards the downside more so than it is the upside. Because you've already had the effort here and you haven't had a similar type of attempt to break from balance to the downside, right? So if anything, that reaffirms the point to some extent that making important financial decisions like right here is pretty shitty. Yes, if you're buying the lows, this is a pretty good area to rebalance or do whatever because it's actually back at structure. But if you weren't one of those wick buyers and you're trying to build a high conviction position right here, I think it's a shitty place to do it, personally. Does that make sense so far? We're also 2 likes away from 100. I'm sure that's an achievable target for us. Okay. Cool. So for me, especially because I'm in USD as is, this is one of those cases where I either want to buy higher or I want to buy lower. I don't want to do shit in the middle of the range, right? As we discussed, whenever you get these big liquidation events, if you're trading at the extreme of the liquidation event, awesome. If you're trading before the big liquidation event and you're on the right side of it, awesome. If you missed both of those and then you see your net worth go down and you just try to trade the churn that follows to make it all back, that's significantly less awesome. If anything, it's just a bit of a shit place to do anything and a really high probability that you get chopped up before something actionable or clear happens. At least in my view, right? At least in my view. So for me, if my argument is I want to buy higher or I want to buy lower, where do those boundaries... And I've already made the argument or sort of substantiated that by arguing that we are in the middle of the range no matter how you slice it, right? And this is the inside day after a big liquidation event, so it's probably just going to be churn and chop. It's just a shitty place to trade, right? So if I'm saying higher or lower, where is higher or where is lower? So for me, I think at the very least, given we have this confluence of weekly levels, right? And this is actually one that we had for a while. Let me just remove this for the time being. I think if you'd like to offer me a weekly close back above 59k, 60k, whatever, so which would essentially engulf the majority of this kind of liquidation drop. If you want to give me a weekly close through there, there's still a risk of some sort of lower, higher resistance, etc., but I think it's significantly lower. I agree with the Duck, who on weekly open said that if you want to be really conservative, you take the failed breakout and you use that as your invalidation. As in, you trade above this, you go towards all-time high. I think that's totally reasonable as well. But we're essentially splitting hairs here, right? We know we have resistance at 60k, there's level at 59k. Ultimately, it doesn't really matter too much. But for me, no matter how you slice it, it's either this is the failed breakout level, right? Because you have resistance, resistance, breakout, fail, still resistance. Or, if you want to take the extreme, this is equally valid. It's just got, you know, resistance, resistance, breakout, fail. It's the same fucking thing, and it's only a few $1,000, which at current prices isn't much. It's not too far from each other. So I think it's kind of a distinction without a difference. But in this case, you can just even take the mean of the two lines, say 60k. If you get strength through 60k, then it shows that, yes, this is a big shakeout. The buyers stepped in, and they did more than just make price go up. They actually reclaimed the meaningful structure, and as a result, there's no strong resistance left. So for me, if I want to redeploy my USD back into the market, I think 59k, 60k, whatever, smash that, and then there's huge asymmetry because the all-time high is unlikely to be resistance, and you just go fucking ape shit towards, I don't know, a shakeout like that. If it then ends up in a reclaim event and just starts grinding higher, I think the sky is the fucking limit at that point, right? But it needs to do that, and it hasn't yet, okay? So if you want to get me on your side, or at least get me high conviction to redeploy and probably smash the leverage button through 60k, and the market just like, and I mean like big green dildos, not kind of, you know, no fumbling about at these levels, then I think the theory that this is kind of the shakeout and then the spring, that gains a lot of ground, okay? Otherwise, middle of the range, not interested. Where is support? Look, if the idea that this is a weekly failed breakout is correct, then generally speaking, my system points me towards the same time frame, which is the weekly. And the first weekly level that I've got is 45 to kind of reassess or make a reevaluation. And then there's this 32, 38 cluster. I think that's about as straightforward as I can make it, right? So just to summarize, we had a big liquidation event which nuked market structure, and in doing so, took price to the middle of the range where it's currently chopping. I think this is where the risk is, at least on a short-term basis. What I want to see is evidence of this not just being the start of a move, but buyers coming in on the back of this ugly wipeout, leverage, reset, weak hand, shakeout, bear trap, whatever term you want to use. I want to see buyers agree with that and for their buys to do something meaningful. And by do something meaningful, I mean break and close above a key level of resistance. Conservative, 59k. If you want to be really safe, you can take it all the way up here. 61, 62k. Do that, and then I think it's proper ape season. 70k at least, probably way higher, etc., etc. In the absence of that, if the buyers don't want to buy such a huge open interest wipeout, funding reset, like you have to ask yourself, like if this kind of move, right? If that isn't enough, well, what the fuck do you want? Right? What more does the market need to do to, if you're a willing buyer, you get full leveraged wiped, you get negative funding, you get March trading in backwardation, etc., etc. Like if that's not enough, then what the fuck do you need, right? And the answer's lower. That's the answer to that rhetorical question. Above here, money, areas of weekly support, money, this kind of low time frame shit where traders who lost a lot on the drop are probably going to try to make it back during the chop and very likely exacerbate the difficulties they've run into. Does that make sense so far? Is that at all reasonable to anyone? Daniel says, we're starting to see weekly market structure emerge. Daily not as meaningful anymore. I think to some extent that's correct, yeah. See, Luke is in here, unless it's a fake venture coinist. We don't like those, although there is no shortage of them on Twitter. Yeah, so that's kind of what I mean by I want to buy lower or I want to buy higher. And this, I think, is just a bit of a shitty level, to be honest. Yeah, that's Bitcoin. Think that's reasonably straightforward. This is the first time we've actually had weakness on the weekly time frame. Some sort of failed breakout, just not. I mean, compare this to this, you can kind of see why it's worth playing a bit defensively. And I'm only speaking, right? If we take these weekly levels, wherever the fuck that was, even from right now, that's an invalidation that's maybe 6 to 8% away. I mean, what the fuck is that in terms of validation? Because again, even if the full bullish thesis emerges, and I redeploy, let's say, whatever, 60k, I'm then targeting like 70 plus. So you can tell where the asymmetry is, at least for me. But again, I may be biased because I'm in USD and I managed to avoid much of this nuke. So that could very much be affecting my perception of things. But I'm pretty clear in terms of what I want to see. It's not enough for me, unless you're buying like the lows, it's not enough just to have a bunch of liquidations. I need buyers to step in on the back of that and buy, basically, take advantage of these conditions. And if there aren't any buyers to take advantage of those wonderful conditions in terms of funding, OI, etc., then I don't want to be fucking stepping in against it either, you know? Yeah, that's that. Let's talk about ETH. ETH has just looked better than Bitcoin. It could still get dragged down if things don't look too great. But it hasn't lost any of the stuff that Bitcoin lost, right? So for the most part, I think you can get away with simply delineating this pre-breakout range, which is also confluent with the prior all-time highs. You can basically take this consolidation. I've just drawn highest close, lowest close. And you can say, hey, my ETH directional bias is going to be bullish as long as we don't close below the lower boundary or below 2K. I think that's pretty reasonable. Do I like this kind of retesty pattern? No, not a fan. And I don't think the ETH-Bitcoin correlation is broken to such an extent that if Bitcoin completely shits to bed, this just holds support and goes the complete other way. I don't think we're quite there yet. But from a TA point of view, or even for shorter-term trading, again, Bitcoin broke out and lost levels and is finding resistance. ETH showed more relative strength on the way up, or just showed more strength on the way up. So unsurprisingly, it didn't lose as much on the way down either in terms of structure. So calling a spade, I think you just take this pre-breakout range and say that's my bias. As long as this holds, we're okay. Any closes below that, yeah, again, no. That would look rough. So kind of 2K in validation, otherwise, I mean, it's at support. I'm just not sold on the argument that ETH can have full immunity if Bitcoin follows through, right? So I think you either need to argue that the correlation's gonna fucking break completely and Bitcoin can take a huge shit and ETH can moon, which I think is less likely, or the plausible or the kind of higher probability bullish case, you essentially have to argue that ETH retesting, showed more strength on the way up, more strength on the way down, and this is just going to drag the market higher, even if Bitcoin is an unwilling or less willing participant, reluctant participant, that's the word, English, in this move up. But again, just a bunch of uncertainty, right? A bunch of uncertainty. And I still think that the reasonable play for this week is, one, altcoins on a short to mid time frame, and then two, simply watching Bitcoin to see if anyone steps in to take advantage of the funding, the reduced open interest, the dip, etc., etc. Does that make sense? Bit of a simple one, but I mean, it is what it is. Any coin that surprised you for relative strength signal? Dogecoin held up incredibly well. Solana dip got bought and it just ripped. What else? Yeah, those are the main ones, I think. Oops. Yeah, the Serum ecosystem, Sam coins, sure. Yeah. Yeah, that's kind of the majors for the time being. You can take a look at the strong stuff. So I mean, this is insane, right? I mean, look at this daily candle. That's absolutely crazy. I think when you see that type of price action, where you get a high into a kind of market structure breaking drop and then gets fully engulfed, if you get a pullback back to the high, it's generally a good spot to do business, which in this case is a bit below 30. You can get mid to high 20s. That's probably a good risk to find opportunity. Otherwise, you're likely stuck. I mean, it doesn't look like it wants to go down from this consolidation. Again, a lot of the time, the way you get left in the dust is you get a big level, it breaks, and then price starts to consolidate, and you leave your bids at the level, but then it's actually the consolidation that it breaks out from. So that's a bit rough. A lot of the times you have to get comfortable trading within the compression if you want momentum continuation, rather than trading back at the level itself. It's just one of those payoffs or trade-offs, sacrifices, whatever. But I mean, this looks strong either way, especially if it goes back to somewhere where I can actually trade the damn thing. I mean, Dogecoin is Dogecoin. It's the relative strength's just been insane. Ideally, it doesn't get stuck around these highs for long. There's also some, I think isn't it 420 tomorrow? Dogecoin Day, all this kind of memes. I'm not keeping the closest tab on this event specifically, to be honest with you. But it still looks strong, right? It still looks strong. I don't have a strong view. It's crazy impressive how well Doge held up when everything else dipped, and I'm not going to be an idiot and try to ignore that, short it, fade it, whatever. I mean, it looks strong. So I'm not gonna pretend otherwise. XRP. I'm really bad at trading this coin. I mean, I would argue this is the pullback to the first like little support it's got at this range, just under 140. That's kind of what you want. One lesson to learn from XRP is that if it breaks support or really starts to pull back, those pullbacks don't just bullish retest. They genuinely just fuck you for the most part. It's not really the best coin for trading throwbacks, so to speak. So if it doesn't hold short-term support, it's not one of those where you just buy the rounded retest level, for example. Not in my opinion, at least. It tends to be pretty punishing towards that type of behavior and gets pretty choppy. I mean, this is a good example. But yeah, as I said, my approach to this, when it comes to the altcoin side of things at least, is sectoral. So you've got all the FTX indices. Oh, that should add the dragon one, right? There we go. Yeah. So I'll just literally look through the indices as to what's performing well, and then look within the indices into individual coins which showed or are showing relative strength. So again, you've got your Solanas, your Serums, etc., which are kind of leading, and Dogecoin as well being the obvious one. But to be completely honest, I've just got my attention on Bitcoin, especially because I never feel comfortable not being fully deployed in the market, especially when the market looks like this. So I'm kind of full attention, razor focus, looking for a case to get back in and smash the green button. I still think, from a whatever risk-reward perspective, however you want to conceptualize it, this is an area that's worth at least being aware that we've got a shitty failed breakout, and we haven't had that in a while. So that context is informing my positioning at the moment. But speaking more broadly, not being exposed to the market is a huge risk in itself when it comes to crypto and this current trend. So I'm almost just spending all my time looking to be invalidated and getting back in at a point which makes sense, which, as we discussed, is either lower or higher, and I think this area kind of sucks. Short-term trading, be my guest. Anything else, bit trickier. But we all know that we came here for bullish Bullish copium. So here it is. High, low, higher high, higher low. Then the next higher high, straight to 66k. There you go. Market structure. So it's what we're all here for, right? Bullish propaganda feels good, yeah. Can we go back to ETH? I don't think there's much else to add on ETH. Just looks better than Bitcoin, but I don't think it's going to be entirely immune to Bitcoin if it chooses to go either. What do I think of Litecoin? Didn't that just go up? What's the LTC BTC? Did that survive? Yeah, it still looks reasonable. I hate Donald for being right on this. I think the newsletter was really bullish this as well from like when this candle was being formed. So that's good. If you haven't subscribed to Technical Roundup, you're a mug. And it comes out in 24 hours. So go to trletter.com and read it, because I'm sure we'll have some spicy stuff to say. Yeah, I know the candles are ugly, but I mean somehow Don just decided to go high conviction on this, and it worked. So, you know, good for him, I guess. Yeah, I mean this is just going up, right, towards its Coinbase high. Bear Duck will bring bulls on Wednesday. Yeah. I suppose if I had to give some unwarranted advice, or some that says, wait, where is your bullish invalidation? Basically, the bounce is good. I'm not blind. The bounce is good, and I'm looking for reasons to get back into the market and jam the green button. I ideally want to see a reclaim of resistance, and probably the best, the nearest level for that is 57k. The nearest level for that is 57k, right? The more conservative and better higher time frame level is closer to 59, 60k. That's it. So I think within here, there's still risk there. Could still just be a bearish retest. I think above 60k, you're really scrambling to make any sort of case for bearishness. So this will probably be enough to get me back into the market. All in. Anything back above the failed breakout point, so above here, that's just lights out. And there's a good chance you don't get this type of entry, because I think if it comes that close to the high, it probably just accelerates and you end up chasing. So a good middle ground for me is like 59, 60k. Any daily, weekly strength through there, that's a reclaim of a massive level, and I'll probably, well, almost certainly, depending on, unless there's something really unforeseeable going on, that's my trigger to get the fuck back in. Yeah, that's it. Yeah, the only piece of advice I was gonna give is don't rush to make it all back if you lost yesterday. I think most people got stung in one way or another. Either altcoin liquidations or their portfolios down from its high, etc., etc. And so there's a real emotional rush to make it all back in one trade and restore that P&L line curve to where it was, etc. And I'm just, my view is that this is you're making the game even harder for yourself than it otherwise would be with where the market is right now. There's really no rush to make it all back, so to speak. If you look at like the price action we've been trading, we are incredibly blessed and privileged to be sitting through something like this in a year of lockdowns, lost jobs, closed businesses, etc. So those 10-20% haircuts, a sense of context will probably help a little bit. There's really no rush to trade in shitty places for low conviction positions just because you're feeling the sting of a move down. At least in my opinion. I think what the bullish roadmap looks like. Step 1. Nearest resistance. Close above 57k. That'd be really good. Because again, like look, we had a big liquidation drop. We've had a bit of a bounce. The question I always ask myself is, what has X move achieved? So if it hasn't broken anything, any resistance yet. Hasn't reclaimed anything yet, right? That hasn't, like, its CV, so to speak, is empty. There's no reclaims, hasn't done shit yet. The stage is set, right? With funding, open interest, etc. Everything's in a good spot for it, but hasn't got the rap sheet yet. So the bullish roadmap, first things first, the nearest level of resistance, 57k. Close above that, good. And then probably the highest, or the higher conviction level, close to 60k. That's sort of the big daddy. You close above that, then it's almost certainly lights out. Almost certainly lights out. But yeah, I mean, you could literally just do that, right? This is your Bitcoin daily chart. There's a daily and weekly level at 57k. And then there's another daily, weekly level at 58, 59k. And then if you want to be really conservative, you actually take the breakout high itself closer to 62. But I think really that's really conservative. I think this range is the one. So the bullish roadmap, reclaim this, maybe chop, reclaim this. At that point, almost certainly lights out, and we'd be up like over 20% from the lows, and structurally it will have reclaimed resistance, etc., etc. But it needs to fucking do something, right? That's probably if you're gonna remember anything from these live streams, it would be the following: when you get big liquidation events, it needs to actually achieve something after the liquidations have played out. Otherwise, it's not a sign of reversal, right? That's about it. You need to set some sort of test or bar or standard for these events. Like, okay, yes, fine, a bunch of people got liquidated. Yes, it's a record liquidation. Yes, funding got reset. Great. Well, who the fuck's coming in to buy it? And if the answer is no one, well, that sucks. And so I just want to see a bit more of that. George says, did you long the dip, sir? No, sir, I did not. I'm sitting in my USD waiting for something good to happen. I got lucky and missed this drop. I was in cash, so I'm waiting for people like you to do your job, George. Buy this damn thing, close it above resistance, so I can start getting involved in this market again. Oh, you did. Good. Buy more. I needed to break some levels, man. Needed to break some levels. Okay, so I think that's most of it, to be honest. Did you put buy orders around 45k? No. No. I did not. I did not. People asking about bearish roadmap. What do you mean bearish roadmap? What's wrong with you people? I mean, the bearish roadmap is like, you get this big liquidation event and then nothing gets reclaimed, nothing happens. We just start to drip lower towards the low that was made and this double bottom, etc., etc. Like the bearish roadmap is price going lower. It's not terribly complicated. I'm more interested in the bullish roadmap. And as I said, I want to buy higher or I want to buy lower. I think this, where the market is right now, is where the risk is. It sucks. If I want to buy higher, conservatively, it's sort of above 60k. If I want to buy lower, I've got weekly levels 45, 38, 32. This is not not something I want to rebuy. I don't want to rebuy what looks like a bearish retest, especially if I'm fucking cashed from earlier and avoided getting my ass handed to me, right? I'm going to be a bit conservative. That's all. That's all I've got. Hope that made sense. Let me know if you have questions. I will do my best to answer them. And also like the video if you've picked up anything remotely useful during the course of this hour. Do I watch Premier League? Fuck off, George. I do not watch Premier League darts. You'll be disappointed to know. How are you today? Pretty good. What's your opinion on the super cycle? I'm not clever enough to have an opinion on the super cycle. And I think if you use the idea of a super cycle to justify bad trades and using a ton of leverage, you'll get fucked even if the super cycle theory is correct. So I just think it depends on how you use it. Yeah. Is Casual Friday dead? Good question. We are doing one this Friday. After a long break, the Duck and I are doing just me and him, Casual Friday with the boys, or just with the boy, I guess, or with the Duck. I don't know. There's no guests, just us. Time for an old school catch up with the Duck. That'll be a fun one. I can come as a guest, yeah. How's the chat feeling? What's the sentiment like? Did you buy the dip when you're feeling good? Did you get wrecked and you're scared? Are you confident? Are you waiting for something? Scared, defiant, bullish, bearish, liquidated, wrecked. Bored, that's a good one. Small losses feel good. Yeah, that is a feel good. Liquidated, underwater spot, lost but not too much. That's pretty good. Waiting for my Jimmy John sandwich. Nice, Luke. Sat in spot neutral. Cool. I think if you didn't get liquidated, you're like winning compared to the average trader. So maybe that'll make you feel slightly better. Bought the dip, sold ETH on the pump. Very reasonable. Either way leads to alt season. Nice. Applying for McDonald's. Yeah, okay. I'm sad you didn't DM me on Twitter telling me to de-risk. I kept the thread. You can just go back and look at it. I bought the top and then got out again before the nuke. So it's whatever. Again, being wrong is fine. Staying wrong is how you get fucked. I'm curled up like a ball. Yeah, alright. On the air, spewing all over the air hockey table. Gonza says, hey Cred, I've been watching your TA videos and thought you maybe make one of price action. All of them are based on price action. There aren't good videos about that, thanks. I mean, most of my stuff is based on price action, right? So... And also, you kind of have to understand where I'm coming from in terms of incentives to make content. At the moment, it's influencer season, right? Like, you're new to the market, you go on Twitter, there's people absolutely smashing altcoin calls. What Bitcoin does kind of doesn't matter, and people aren't trading it anyway. And 60 IQ trades on altcoins, like literally buying breakouts, is what's printing at the moment. So my incentives to make educational content on like trading, futures, risk management is really fucking low. Because why would I bother? It's not the right market for it in terms of audience and all of that kind of stuff. Like, no one cares. You just follow influencers and you get rich. And you get poor later and you lose it all, but at some point you get rich. So given the overall context of the market, it certainly doesn't incentivize or push me towards that type of content. Like, you'll want to learn after you get wrecked, right? That tends to be the main driver. You talk to most people in 2017, and they're like, dude, I made so much money, I had no idea what I was doing, and then I got fucking wrecked, and then I started to learn how to trade. That's generally how, at least in many cases, the chronology takes shape, right? So within that, we're currently in the I just started buying stuff and made a ton of money portion. So me coming in and trying to teach people or share my insight, I don't even like the term teach people. I'm not teaching you shit, right? Like, I'm not sitting there with you going through your trades and showing you how to do stuff or how I do stuff, etc. It's not really like that at all. Like, my videos are signposts. They're very loose, impersonal pointers at best. So there's no teaching, there's no mentoring going on or anything like that. Either way, though, it's just not the right time. How do you feel about holding yachts now? I've never felt better about holding yachts in my entire life. Fucking yachts. See, George is good. He came on the stream, I told him to buy, and we had a bit of a move up. This is all George with his accumulation algo. Thanks, George. My yats are the only thing that didn't dip. Can you get liquidate on yats? You cannot get liquidated on yats. I mean, you'll never be able to liquidate them either, right? But at least can't get liquidated on yats. Yats are a hedge to the global financial system, for sure, for sure. Did you see Nassim Taleb call Scott Melker an idiot? I did not see that. George, buy more, George. This red candle is not acceptable. You need to engulf it straight away. Who doesn't he call an idiot, to be fair? Yeah, Taleb's got a bit of a potty mouth on Twitter. FTT, I think, is pretty simple. It's like it kind of moves in tandem with Bitcoin, right? Except it outperforms Bitcoin when Bitcoin goes up. So it's one of those that if you're bullish Bitcoin, you're almost always better off just being long FTT, at least from what price, action, information, context we currently have. Like, if Bitcoin looks good, you just jam the green button on FTT. I don't talk about like long-term stuff a lot, it doesn't make any sense, but with a reasonable degree of confidence, if we're talking about like multi-year holds, etc., I really think there's like a generational asymmetry in that we get to bet on Sam quite early in his kind of building career, which I think is a fucking insane opportunity, because Sam started trading crypto in like late 2017, I think, and it's mid 2021. He's already taken over the world. Seems like a pretty reasonable fucking bet, right? It's kind of, the way I meme about it is, it's kind of our generation's Bezos in crypto. And then when you talk to him and realize that crypto is just like one avenue when it comes to what he wants to do with FTX, and crypto is almost just like the bootstrap for FTX to some extent, suddenly holding FTT, Solana, all this other stuff becomes pretty attractive, even if it does go through market cycles or whatever. So, like, if a good friend came to me and said, I want to hold crypto and I don't give a shit about price, what do I get into? It'd probably be like 60 to 70% Bitcoin and ETH, and then the rest into fucking FTT, BNB, Solana, and maybe some other shit. That's kind of how I'd set it up. You just bet on the builders, and the people selling the shovels, so to speak. Who's next? Technical Roundup guest? Well, this Friday it's going to be Casual Friday, so it'll just be me and the duck shooting the shit. So that'll be fun. Do you feel Bitcoin alt correlation will be lower this cycle? I mean, it has been, right? It has been. Cool. Okay, plenty of content done. Just to summarize, don't rush to make it all back. Respect the weekly time frame, so to speak. I think this is a slightly clunky and awkward area in the mid-50s, and probably not where you make all of your money back. I think high probability longs are either higher or lower. As for higher, through 59k weekly, anything above 60, basically reclaiming a lot of this dump and actually breaking resistance. Really good case to be made for this being the washout, reclaim resistance, and just full fucking send. So 60k plus, really good, and that's not too far away, sort of worth waiting for in most cases for Bitcoin. ETH is absent from... No, here we go. ETH looks better than Bitcoin. Anything above 2k just looks fine, although I don't think it'll be able to shrug off if Bitcoin decides to take a shit. So worth bearing in mind anyway. But as long as 2k holds, it looks pretty good, all things considered, or at least stronger than Bitcoin. On the altcoin side of things, follow your indices, specifically the ones showing relative strength, which is Doge. You don't want to see it come back below its breakout point. And Solana, with the nearest support being within the range at 30, and if you're lucky enough to get a pullback, mid to high 20s. That's most of the stuff I'm following, and if you want all the spicy charts, insights, and updated stuff, free newsletter, 1 email a week, trletter.com. It'll come out in about 24 hours. It'll have more stuff there, all the same. That's all from me. Hit the like button. We can get 300 likes if you're watching this now or as the replay, I'm sure. Be grateful for your support, etc., etc. Thank you to Blockfolio, the sponsors of Technical Roundup. Mobile trading app, portfolio tracking, can't get liquidated, which is better than what most people can say over the last 24, 48 hours. So be sure to check them out, and thank you for their support. That's all from me. See you in the newsletter, and then Casual Friday with the Duck on Friday. Take care, and I'll speak to you all later.